Good evening, people. Good evening. Welcome to another Tuesday night of doing a bit of live Q&A. Sorry about that. Good evening to all of you, and thank you very much for joining me. As you can see, tonight I'm in the office. I had a bit of a late appointment this afternoon and therefore couldn't get finished in time to go home. So here we are, and we are ready to take your questions. Hello Amor and Marinda and Jaco Baas and Mark Combrink. Welcome to everybody. Nice to see the people and a couple of, yes, there's even a couple of people. Can't help to see the Cheetahs photo at the back. Yes. I am from the Free State and therefore still a Cheetah supporter. Hallo Willie. Lekker om jou hier so te hê, meneer. Goeienaand. Let's see. Betty Pan het gesê, can't help to see the Cheetahs photo at the back. Ja, kliënt het actually hierdie vir my gegee. Hulle was by die Vrystaat Stadion gewees vir die Vrystaat hulle tweede Currie Cup gewen het en het dit vir my gebring en toe het ek 'n paar jaar later hierdie een aan hierdie kant gekoop wat ek hier so teen die muur opgesit het. Proud supporter of the Cheetahs. Weet nie almal dink hulle is fantasties nie, maar ek love my ou Vrystaat manne. So what can I tell you tonight? What is new? What is not? What is on? What is not on? So let's start off with Mr. Donald Trump. Mr. Donald Trump is in office, and I don't know if any of you listened to his inaugural speech last night. I personally think that this is the first time ever that I've heard a president that's been elected not only canvass and tell people what he's going to do, but then actually in his inaugural speech have the guts to keep on saying, this is what I'm going to do. So I think that whether everything that he's going to do is going to be good or not, I don't know. But I think that that what he is envisioning for the USA is fantastic. It might not be good for all countries. It might not even be good for South Africa because he's already said that any country that does business with China, he will charge taxes and this, that and the other. But personally, I think this is good for the world in terms of having a president that has the courage of his convictions, number one, and number two, somebody that really wants to see the economy growing, which will help individuals, especially if you can get inflation down, if you can get the cost of stuff down. I think it's good. So I don't know about you guys, but I'm pretty happy that Donald Trump is the new boss, or the boss again in America. Sorry, mate. JP, you say you're hopeful that it will be good and that everything will materialize. What you say? Yes, I agree with you. I do, especially his common sense that he was talking about. Especially the fact that he says men will be men, women will be women. That's the only two genders. Thank goodness, that is common sense, man. That is fantastic. Willie, I'm also hopeful that it will do good. Fantastic, I do think so. Biden was hopeless, yes. Sometimes you just can't understand when it comes to world politics how certain people actually manages to get into power. It is absolutely 100% ridiculous. So I think Biden originally was okay, but man, I think that for the last 2 years that man has been completely hopeless. Any case, we're not here to talk politics, we're here to talk finances. So is there any questions that I can try and answer for somebody? Or are we just going to sit here tonight and you're going to look at my photographs that I've got behind the wall Maybe I should show you there. I've got that World Cup photo over there. That's the top 50 Springboks of all times. That was only a few years ago. Another World Cup photograph. There's old Faf du Plessis and his mates. And there's a little golfer. And that is a very special Scottish rugby jersey that was signed by Scott and Gavin Hastings. I was lucky enough to have a friend living in Scotland that had a hair salon or barber shop or whatever they call it, and Scott and Gavin Hastings came to his shop on a regular basis to cut their hair. And when he came to visit me in South Africa, he said to them, please just sign a jersey for my friend, because my friend is a big rugby supporter. And they did. So I'm pretty chuffed having that Scottish rugby jersey. The writing or the signatures are still are starting to go down or go light, but yeah, it will always have a special place in my heart. And on this side, I do have the Springboks that's won the World Cup. Sia is not part of that group picture. That was from 1987 to 2007. And there we go. There's the one with Sia, 1995, 2007, 2019. So yeah, I quite enjoy my sports memorabilia. I don't have nearly as much as I would want to have, but I'm happy with what I do have. Let's see, not much happening tonight. That's interesting. Normally quite a lot of people that joins us, but tonight it seems to be a bit quiet. So for those of you that are here, talk to me. Okay, JP, you say, what would you say is a unit trust? What did you say is a unit trust good with Alan Gray? Oh, JP, in terms of Alan Gray, I must say Alan Gray has a number of good unit trusts, and they've always been one of those companies that's always been up there, that's always been performing. The Alan Gray Balance Fund, I've always liked. I think that's a very good balance fund. So that's a medium risk fund for the person that doesn't want to be too high, too low, but wants to earn a return of inflation plus 2 or 3%. Then the Alan Gray Equity Fund is a good South African local equity fund. I quite like that one. It's always up there as well. And then they've got, I think it's the Orbis Global Equity Fund, if memory serves me right, which I also think is a pretty good one. Their Stable Fund, very, very nice Stable Fund. So there's a number of Alan Gray funds that I really rate and that I use and that I enjoy. Fantastic. Common sense. Only kidding. Are you common sense? Are you kidding about your name, or are you kidding about Biden, Trump and his common sense? Ah, wonderful. I don't know exactly which way that one floated, but let's go with it. So JP, yes, mate, there is a number of good ones, but you know what the nice thing is, as much as we have those good funds with Alan Gray, you've got good funds with most of the companies. There are, I must be honest with you, there are a couple of companies, a few companies that I would under no circumstances recommend to people. And their funds might even be up there. Their funds might actually be performing in the top 5, top 3, whatever the case might be. But I will still not be supporting those companies. And it's purely because of the company's philosophy on how they do their investment structure. I think one of the things that people don't often talk to their clients about is the philosophy that a company has when it comes to their investment strategy. Some companies buy value funds, which they keep, and they try to stay in the value fund, so to speak. And then there's other companies that really try this buy low, sell high type of effort. And it's those companies that I am a bit scared of and that I won't place my clients' funds with. Okay, so let's see. My pension fund is invested in top 10 companies, some to mention are. So I can't tell you what the top 10 companies is, to be very honest with you, because I do not do stock picking. What I can tell you is there is a number of IT companies and funds at the moment, especially in the global funds, which is making up most of their global fund and is performing brilliantly. And they've been referred to in the last year or so as the Magic 8. And those companies are performing exceptionally well. And it's because of them performing so well that the global equity portfolios, certain global equity portfolios, are performing so well. But if you have to ask me which is the top 10 companies in South Africa to be invested with if you are investing on the JSE, I'd have to go and Google it. China, UK, USA, same thing. I'll have to go and Google it because that is not where I play. I like to understand the value of companies and why portfolio managers choose them, whatever, but I never concern myself with companies in terms of their ranking on top 40 or top 20 or anything like that, because I prefer to put clients in portfolios. I feel much more comfortable putting a person into something that is diversified and spread over a number of companies. And most portfolios have 50, 60, 100, 150 different companies that they are invested in. So there is absolutely no common sense for me to know all of these companies that they are invested in and the percentages that they are invested in. Any case, so there you go. What did I see there? JP, you say, I'm in government, is it best to retire or? And I would assume that the or would be resign, JP. JP, always retire. Always, always, always retire, mate. It doesn't matter whether you're with government, whether you are with a private pension fund, a different company, it doesn't matter. Always retire. It's always the best. Just looking at it, especially if you're with government and we are talking GPF fund, especially looking at the benefits that you will lose if you resign, that is big time. The medical aid is really big time. Secondly, when it comes to GPF, I have done the calculations on a number of occasions. What they offer you as a pension fund versus what you can get if you take your capital and you put it with a different pension fund to give you a pensionable income. Vast difference. I did a calculation for a client the other day, and the guaranteed income that the GPF is giving that client, if I have to take that money of that client and put it into a guaranteed income portfolio or guaranteed income plan with one of the insurers that we deal with, I'd have to find him a guarantee of 11.5% with that company. And you don't get that. You are lucky at this stage if you get a guarantee of 8.5, 8.6% with the insurers. So absolutely, you stick with the GPF, the income you're going to get is better, you're going to pay a lot less tax, and the benefit that you're going to keep is the best. So just retire, never resign. Oh, common sense, here you are again. What is your comment on arbitrage? Not sure on spelling. So I like arbitrage. If you actually go and you look at the dictionary and you look at what arbitrage says says that I get a guaranteed buy price and a guaranteed sell price. That's what arbitrage means. And I haven't dealt with a lot of companies that does arbitrage. I've got one company that we recommend when it comes to arbitrage. And basically what they do is they do crypto arbitrage. So they get a guaranteed buy on crypto in the UK, USA, offshore, and then they get a guaranteed sell in South Africa. So they take your money and a couple of other people's money, and let's say it's 10 million rand, and they've got a deal for 10 million rand, and they know that when they do the buy, they're guaranteed that they are buying for 10 million rand, and they are guaranteed that they're selling in South Africa for, let's call it 10,200,000 rand. So they know there's a definite and immediate profit of 200,000 rand. So I do believe that arbitrage is a good investment from that point of view. My bigger problem with regards to arbitrage is that, and this I keep on saying is my biggest risk when it comes to arbitrage. Arbitrage is one company that you are investing in. So you have to believe And we all have to believe that that company that you are investing in, that their directors, their board of directors, trustees, COO, CEO, financial manager, whatever, that they are all above board. That's the thing that we have to worry about. Because all those people, if one of those people starts committing fraud or anything, the company goes down. If the company goes down, where does your investment go? So that's the one thing, and that's why I like to make use of portfolios, because if you've got a portfolio with 100 different companies in it, and 2 of those companies go down, you've got 98 other companies that can still carry you. But if you are invested in arbitrage and invested in one specific company and something happens in that company, then it's gone. The second thing that I think will become a concern at a later stage when it comes to arbitrage is anything that has got momentum, that shows good returns. More and more people find out about it, more people start buying into it, and the pot is only this big. So at some point that pot fills up and there is no more space for anybody else. And when that does, the profits start shrinking because we cannot do as many trades, we can't get as many of those things. So at some point in the future, I do think that either arbitrage will have to adapt into different markets, or it will just show substantially slower and smaller returns. So that's my opinion. But at this stage, pretty good exercise. Opinion on Old Mutual Global Equity Fund versus Satrix MSCI World Fund. So, personal opinion, I think Old Mutual Global Equity Fund is better than most of the other world funds, even the MSCI World Fund from Satrix. And that's not based on short-term performance. Remember, on short-term performance, one fund can outperform another fund by 5, 10, 15%, whatever the case might be. What I base my opinion on is the fact that the Old Mutual Global Equity Fund has been giving an average return of about 14% for 24 years every year. That is good. Most of these funds, most of these global funds last year did 28 to 33% over a certain period of time. So it was brilliant returns for everybody. And I'm sure that the Old Mutual Global Equity Fund was not doing the best all the time. I'm sure there's a lot of other global funds that beat it at some point over certain periods of time. But historically, if you look at the historical return over a 24-year period, 14%, very difficult to go and beat that on a year-on-year return. Naspers, Absa, Standard Bank, Capitec, AngloGold, good. Yeah, all good companies. Absolutely all good companies. If I were to take some capital and invest my capital into direct shares, then absolutely, these are companies that I would look at and that I would most probably invest in. Once again, I do not concentrate on shares. So I'm not somebody that's going to tell you, yeah, Naspers is fantastic or Absa is fantastic. I think the one thing when one wants to buy shares is you have to have some understanding of the market. And when I say some understanding of the market, there's always these ebbs and flows in the market. So at some point, financials will start going down. If financials start going down, it means that most banks' share prices will start going down. If you understand that concept and you can follow that trend, then you can most probably go and buy Absa and Standard Bank and Capitec shares when they have taken a bit of a decline, and you can invest the money, you can hold it, and hopefully you will get this upward surge and you will make money out of it. The same with something like Naspers, and the same with something like AngloGold. They all go through the ebbs and flows. A few years ago, for example, Sasol in the COVID period went ridiculously low. I mean, Sasol shares plummeted to next to nothing. And at that stage, it was most probably one of the best buys because everybody sold their Sasol shares. But people knowing and understanding that it's still a good company and that this company would always recover in terms, this company would always recover in terms of their share price or should recover substantially in share price. Those people actually bought into Sasol and made plenty of money afterwards. But that's what I mean with regards to ebbs and flows. I will not go. If I've got capital today and I want to go and invest, I will not go and invest it directly into shares just by going, I like this share, I like that share, I like that share. I will first go and do a bit of homework. And at the end of the day, like I say, follow the ebbs and flows, have a reasonable idea of what's happening in the market. Let's see what happened here. Oh, this thing is not updating tonight. Sorry, folks. I'm thinking that nobody is asking me any questions. In the meantime, there's 100. Just give me 1 second. I just need to reach for something. Sorry about that. JP, I got your question now. Fayyad says, is GPF a defined benefit fund? Yes, Fayyad, it is it is a defined benefit fund. And defined benefit means that we do a calculation to determine what your benefit is going to be. You are not left to the market and what the market is doing. So yes, it is a defined benefit fund, and it's a very good defined benefit fund. I was looking at the retirement portfolios. There was a split one. I was looking at retirement portfolios today. There was a split one I found. Okay, good. Let me know which one it is. Where your income doesn't decrease, but the portion is invested in the market. You were looking at a split income fund where your income doesn't decrease, but the portion is invested in the market. Are these better? Okay, I don't know which type of investment you're talking about, but from what you're saying, I understand that this investment gives you a guaranteed income, and then a portion of the capital is invested in the market, so there the capital can go up and down. So I'm not 100% sure which plan, which portfolio, which company it is, and all I can say is that it sounds to me like a what we called way back when a back-to-back income plan. Those plans don't exist anymore. A back-to-back income plan was exactly that. You would buy a guaranteed income with a portion of your capital, and the rest of your capital would go into an investment where you get capital growth. Those plans don't exist anymore. These days, if you want one of those plans, you actually have to go and create it. So maybe that's what you were looking at, but I'm not sure about it, because as far as I'm concerned, I don't know any of the companies that still has those. Very possible that there is companies that still has those. I'm just not aware of it. Yep. Okay, got that part. White shirt makes it difficult to read the comments. I'm sorry, Fayyad, I didn't know it. Next week I'll make sure that I'm wearing a colored shirt again. I do apologize, man. Stan, man, what will you do if you had 150k to invest it now? Number one, I will not tell anybody where I would be investing it. Number two, where I will be investing it is most probably not the same place where you will be investing it. And the reason why I'm saying that is, Stan, man, we all have different needs. Everybody has different needs. Some person could take 150,000 and go and put it into the highest risk investment they can find. An emerging company which can go bust tomorrow, and if they lose the 150k, then I go, oh, so what, not the problem. Another person might have 150,000 rand and they need an income from it, and it's the only capital that they have. They cannot afford to lose even 1 cent. So that person will go into an absolute guarantee. So as you can see, wide variety of where you can be invested depending on your circumstances. So Stan, I won't tell you where I would be investing my money, because where I will be investing it and where you will be investing it is in two different places. There's only one way, folks, always to help people to make the right decision. And that way is to talk to somebody, find out what their personal circumstances is in terms of their finances, assets, liabilities, what your dreams are, what you want to accomplish with the funds, etc., etc. And only once all of that has been taken into consideration, only then can a proper recommendation be made to somebody. your family comes into, there's just so many factors. I know that people think that when you're going to speak to a financial advisor, I'm going to tell him I've got 150,000 Rand, I want to make as much money as possible, and that's it, over and done with, just put the money somewhere. If I were to do that, then I'm a product salesman. Then you could just as well walk into Checkers and see if they've got something there that's an investment money there. The only way for a financial advisor to give proper advice is to look at all those factors, take into consideration family, and then make an informed and advised opinion. 36,000 Rand into a tax-free investment balance into an RA. You see, Fayyad, I like the fact that you have just made this comment on Stan Mann's 150k. So this is what you don't know, Fayyad. You don't know if Stan Mann already has 36k into a tax-free. You don't know if Stan Mann is already contributing, let's say 30 or 40% to a retirement annuity. Because if he's already got 36k into a tax-free savings account, and he's already contributing 30% of his income to a retirement annuity, then to put his 150,000 Rand there is the worst possible advice that anybody can give him. Because for somebody like him, he's already getting the maximum tax deductions and rebates they can get. He should now start looking at a different place where he can put his 150,000, where he's going to get good growth, but where there's going to be no to very little tax impact, so that when he gets to retirement, he has a tax-free plan where he can get a tax-free income. He's got a retirement annuity where he's going to get taxed on, and then he's got a third income from, let's say, a life investment where he's after tax money, and therefore get an income from all three of these investments. And instead of paying tax on the entire amount, he only pays tax on, let's call it, 1/3. So Rayad, I'm not trying to take you out. I'm trying to prove a point here with regards to how difficult it is to just make a blanket statement, say do this or do that. Any case, Fayyad, I see your smiling face, so I take it that you're not serious, but you gave me an opportunity to bring out the point. Would you rather choose to invest in a worldwide general global fund or a flexible global equity fund? Well, you know what? A worldwide general global fund and a flexible global equity fund is basically the same thing. It's 50. It's 6 of the one, half a dozen of the other. It's literally the same thing. Yeah, so doesn't matter. Just if you're going to go into one of those, go into the one that you feel comfortable with. My personal opinion is go and have a look at the fund fact sheet, so that you can see how the performance, how the portfolio has performed, what the philosophy is, what the portfolio manager says they're going to do, etc., etc. And then go and make a decision based on that. I'd rather go with a portfolio manager that's got a track record of the last 20 years where I feel comfortable, than go with a portfolio manager that has started a fund like this 18 months ago and is shooting the lights out. I will just go with a more experienced person. Okay, thank you. Let's see. Siftron, what do you think of global S&P 500? Oh man, Siftron, my honest opinion about the global S&P 500 is it is just another fund. It is a tracking fund. That's what it is. The S&P 500 is a tracking fund. What that means is that they go to the S&P 500 and they say, this is where everything is, and we're going to put your money in here in the same spread as what the shares is, and on a daily basis we're going to adjust it. So basically you're going to earn what that stock exchange is doing. That's what you're going to do. You can, for that matter, be invested in the JSE Top 40. You can be invested in the China Top 20. It's kind of the same thing. It's just, where do you like to go? Everybody talks about the global S&P 500. Why? Because it's the biggest market. It's the American market. And yes, if I want to be invested in the American market, then surely this is what I will do. But I prefer to make use of a portfolio manager that can take my money, put it into America, UK, China, whatever the case might be, have his team of 150 researchers, stock traders, everything. And I know that every decision that's made there is an informed decision. Yes, maybe it doesn't move as fast as the guy buying a quick share and selling it again. But at least I know there's a consistent and very thought through process of investing and getting good return. Valdemar Shorts, I had money with Sasol, sold it too soon. Valdemar, I know exactly what you're talking about. Lots of people make that little mistake. Don't be too hard on yourself, mate. Don't be too hard on yourself. Most people, and I'm mentioning this because of what you said here. Most people sell when markets are diving. When they're nose diving, people are selling because they get scared, they get panicked, they get out of there. Most people buy when markets has already climbed and is already almost at the top. Because we sit and we wait, recovery. Yeah, if it does another $5, if it does another $10, then I will buy in. Most people who lose most of their money or most of their growth is people that try and time the market. So next time you invest in something, if it's something good and it's got a good value proposition, invest and stay invested. That is the secret sauce in investing, is putting your money in and leaving it there. No matter what happens, whether the market goes up or down, you just stick around. In 2020, when we had the COVID situation, oh man, everybody wanted to sell. I created a group, all my investment clients, and all I said to them, relax. I know the market is going down. Just stay invested. Don't panic. Don't sell. And none of my clients withdrew their money. A lot of them got panicked because the market was down 35%, 40%, and I just said to them, relax, hold on, you've got time, we're going through COVID. And 6 months later, they were all up. Not only the 35 or 40% that they've lost, but another 5%. And I honestly, until today, feel that that is the one thing that cemented my place in this industry, because those clients are never going to leave me, and they've referred so many other clients to me. NC, I said, this might be a little off topic. Do you know of any finance companies recruiting? It depends on what you want to do. When it comes to finance companies, if you are a financial advisor or you want to be a financial advisor, most of them are always recruiting. They're always looking at new people to come into the industry, so you can just about walk into any of the big companies. Old Mutual, Sanlam, Liberty, Discovery, most of those companies, if you speak to them, they will have some or other program where they're looking for new financial advisors. If you are talking about something like administration, different story. Then you're going to have to look at places where they offer jobs, so to speak. That's about the best I can tell you. My pension fund is invested in those companies. Pension fund took a dump during COVID, was stressed. Yes, I can imagine that you were stressed. I had lots of people that were stressed. But like I say, I'm very happy that when I told everybody to stay calm and not panic or whatever, they didn't do it. And when we got out of COVID, oh man, I was one of the happiest people around, because my clients listened to me and they came out on the other side much better. I hear what you say. I think it's a hybrid retirement fund. Fine, no problem with regards to that. Makes sense. But I still don't know which company, and I don't know what the product is called. Unless I know that, so I can go and do a quick check, I'm a bit lost, bud. If you had 500k savings, what would you invest with and you are age 30? Oh my dear, I wish you were here when I answered this question about 15 minutes ago. If I had 500k and I had to invest it when I was 30, I would not tell you where I was going to invest it. If I had 500k, I would not be investing it in the same place as what you're investing in. Because one person can take 500,000 Rand, invest it, lose it, and don't care about it. So they can go absolutely massive risk. Other people need that 500,000 Rand to give them an income. They can't lose it. They have to keep it as safe as possible. So they have to go into a guaranteed fund. So I cannot tell you. The only way to tell you is to do a consultation whereby I look at your income and expenditure, assets and liabilities, dreams and hopes, family situation, provision, financial dependence, all those things. And once I've got that picture, then I can tell you what to do with your 500k. Okay. So, sorry, can't give you an answer. I have 5 million to invest. Is property or 8% in a safe environment? So common sense, if you've watched any of my videos, you will know that I'm not the biggest fan of property. My honest opinion of property is a property is only an asset once it's paid off. So this is how I'm going to answer this for you. If you can take 5 million Rand, invest it in semi-decent properties and buy 5 to 7 properties cash, I think it's a decent investment. Because you can rent out those 5 or 7 properties, and if 1 or 2 of them are standing open at any given time, you've got 3 or 4 or 5 that can cover and help with the expenses. But if you're going to take 5 million Rand and invest it into 1 or 2 properties to rent out, I think it is a terrible idea, because if that property or properties are empty, those 1 or 2, you're getting no return on your investment and you have to cover the expenses and everything. Having seen how many people have gone bankrupt because of property deals or property portfolios, I should say, I'm not a big fan of that. So I prefer to take my 5 million Rand, invest it into an investment that works for me, get a decent rate of return, so to speak, okay? And not having to worry about whether I'm getting my rent every month, whether the water and electricity is paid, whether the rates and taxes paid, whether the renter is breaking down the doors, ripping up the carpets, breaking the windows. I'd rather have my money invested, I get a good 9-10% return on my investment, and I sleep tight at night because I don't have to worry about all this other crap that happens when you've got property. So that's my opinion. The property thing I will only do if I can literally buy at least 5 properties cash. And then, if I can appoint somebody to run and manage those properties for me so that I don't have the headache. So no, I'm not the fan of property. And if you want to do it, go and do it. Lots of people making lots of money doing fantastic with properties. And kudos to them. I'm just one that doesn't like it. Thank you. Should have your own show on SABC or something. Money Matters with Quran. I don't know if I want to be on SABC, brother. Yes. Have you seen how crap is SABC these days? Can I put 36k all at once in a tax-free savings at the start of the financial year, or do I have to do 3k per month? No, as a matter of fact, you can put your 36,000 Rand in one go, or you can do 3,000 Rand per month. It's up to you. 3,000 Rand a month, 12,000 Rand every, 4 months, 18,000 Rand every 6 months. It's absolutely up to you. All that the law says is 36,000 Rand maximum per year. That's all that the law stipulates. Nothing else. The moment that you put in more, that's when the trouble happens. And yes, it is obviously from the beginning of the financial year, from the 1st of March until the 28th of February. So go with it. Can we join the group? Is it on WhatsApp? I'm not sure what you're referring to. You know what, guys? Now that you're talking about a group, the one thing I have been thinking about doing is actually creating some seminars, investment seminars, budgeting seminars, etc., etc. And then telling people about it, offering it for free, and maybe offering it on a weekday afternoon or evening or whatever the case might be. So if any of you guys listening here, I know there's not the hundreds of people, but the few people that are on here, if you feel that that would be nice and you would like to attend something like that, please go to my profile, check the WhatsApp number, and send me a message and tell me if you would like to attend something like that. I would gladly start inviting people and yeah, maybe do that instead of a SABC program. Thank you. I'll get the info on the company and product. Great stuff, and let me know about it. Fantastic. What's the time now? 8:43. Sorry, I just see my battery is starting to go, but that's good. Ranesh, hi Kone, would you recommend increasing the monthly premium for retirement annuity? So Ranesh, yes. My personal opinion is that anybody and everybody should be investing at least 15% of their gross income into a retirement annuity. So you're going to have a look at what your pension provident fund contributions are if you have, and then your retirement annuity, and make sure the total contribution is 15%. You can invest as much as 27.5%, and your income and a lot of other things will determine if that's going to be good or bad. But, and this is the but that I want to give, I am a big fan of retirement annuities and investing the maximum that SARS will give you as a rebate, because you're getting that money back and then you can reinvest it. It's a whole wonderful snowball effect thing. But I'm also what's the word that I'm trying to find now? I think I'm also level-headed. Let's call it level-headed enough to understand that you don't want to do all your investments in retirement annuities and pension funds, because if you put all your investments in there, you're getting all these rebates and the tax breaks and whatever the case might be. But when you go into retirement, then you're going to pay tax on the income that you're earning. So then you might sit to the situation that you've got millions of rands, you get a 50,000, 100,000 rand a month income, you have to pay tax on it, and you once again back into a tax bracket of 36% or higher. But if you do your retirement planning properly, you get your rebates that you need with certain amounts of contributions, but then you take a certain amount of your money and you invest it into life investments or endowments as we call, and you've got these two investments that's running. Now you get to retirement, and now you get an income of, let's call it 30,000 rand a month in your retirement annuity. You've always had your rebates, you've always received your tax back, and you get your 30,000 rand a month and you're being taxed on that. On the other side, you've got your life investment where you're also getting 30,000 rand a month. But that's already been taxed in the portfolio, so you're getting an after-tax income. So now you're getting effectively a 60,000 rand a month income, but you're only being taxed on 30,000 rand. So that helps in retirement to make sure that the tax in retirement is less, and you have a better, what do we call it? You've got a better portfolio, you've got a better balance in terms of your assets. And then with that goes other things like the beneficiary nomination, the legacy you want to leave, etc., etc. So as much as I'm a big fan of retirement annuities, I do not believe that one should invest everything that you have in that. Okay, great. We will see if we can do the seminars things. Can we join this group? That's where it was now. Let's see. Ravish, does this mean that unit trust TFS will grow at double the rate? No, I don't think that will happen. I think, Donnie, hakak vry's dat, ja, Baba. Does this mean that unit trust TFS will grow at double the rate? No. So, Ravish, at the end of the day, the growth that you're going to earn in any investment is just as good as the investment is being managed and the portfolio grows. If you are investing in a tax-free savings account which is giving you 7%, that's all you can expect. If you've got a tax-free savings account that's giving 9%, that's all you can expect. If you invested in a tax-free unit trust and that tax-free unit trust gives 15%, that's what you're going to get. But if that same tax-free investment is in a unit trust that tanks and delivers a minus 10%, then that's what you get. So it all comes back to the old question of risk versus reward. Whether you're going to be in a bank investment, life investment, unit trust, on these tax-free plans, they will only perform as well as the portfolio is managed and as high as the risk is that you're willing to take. I hope that makes sense. My company invests 7.5%, our personal investment max is 20%, I'm pushing to get... Yeah, good, very good, very good. Push it to 20%. Let's see here. Dani, ek neem aan jy is ook 'n Vrystaat, my maat, daar kyk Vrystaat. Ronesh, thanks so much, Kunai. By the way, I work for the SABC. Ronesh, you won't believe it, mate, but I've got 3 clients that actually retired from the SABC, whose pension fund money I reinvested for them when they left the SABC. I know the SABC very well, mate. I spent many days in their offices. There on the side where the radio finances, where they've got that restaurant at the bottom. Some stage it was the worst service ever. But at least the cool drinks were cold. But yeah, I know the SABC very well, mate. I've spent many hours and many days there. What is your take on investing in gold Krugerrands? XOXO, Zozo, and take it. What's my take on investing in gold Krugerrands? Personally, I don't like gold Krugerrands. I think that always sold overvalue. I think that when they are advertised, no matter what the discount, whenever you buy them, they're overvalued. When you have to sell them, you're always being offered less than what they are worth. I think it looks very nice if you buy a gold Krugerrand and you can put it on your mantelpiece so that everybody can see that you've got one. But personally, I am not a big fan of the Krugerrands. I have never come across one client, and I've had numerous that's bought Krugerrands, that's actually sold their Krugerrand for a profit. Even when the gold price rises extraordinary like it did last year, I have yet to come across somebody that said, listen, yeah, I bought it for $1,000 and I sold it for 1,600 rand. So no, I don't know. There's just something when it comes to Krugerrands where you never get the value that you should be getting. That's what I should say. My pension fund grew by 16% over a year, so I really want to pump it. It's doing well for now. So your pension fund most probably grew 16% over the last year. And the reason why it would have grown 16% over the last year is that we had an exceptional year, both locally and internationally in terms of equities. It is something that no portfolio manager, no econoom, ek kry nou die Engels vir econoom nie, predicted, and nobody actually said this is what's going to happen. I think everybody was equally surprised when we saw how good global equity funds and balance funds and everything was doing. So the 16% you got was because we had a pretty exceptional year, but it was 1 year. So here's the thing with regards to retirement annuities. You win on the tax rebates and the growth on growth, and you win obviously because of the tax rebate in terms of tax that you get back from SARS. Where I do feel that you do lose out a little bit on retirement annuities is it is all legislated by Regulation 28. And Regulation 28 says that you cannot have more than 75% of your total fund in equity. And of that 75%, 40% in global equity. So, if you invest into a retirement annuity with the maximum equity exposure, you on a 75% equity exposure, which means that you are on a medium to medium high risk portfolio. For the person who wishes to invest, let's say for 15, 20, 30 years, and they say, listen here, but I don't want to have only 75% in equity, I want 100% in equity. A retirement annuity is not going to be the thing, because they cannot have so much in equity. So for that person, a life investment with an equity fund will most probably be better. And all things being equal, if these funds perform the way that they are structured and intended to perform, a Regulation 28 fund should perform at say 9%, while an equity fund, because of the higher equity, over a period of time should perform at 11%. So if you put two exact amounts into a retirement annuity and a life investment, okay, and then you go and get your tax rebate on a retirement annuity and you reinvest it into the retirement annuity. So let's use a stupid example. You've got 100,000 Rand for each of these. Put 100,000 Rand into your retirement annuity, 100,000 Rand in your life investment. Then you get your 31% back from SARS in your retirement annuity. You put it in again. Now you're sitting with 131,000 Rand in your RA and 100,000 Rand in your life investment. Strictly speaking, the RA must do better than the retirement annuity because you've got more money there. But if the RA is performing at 9% because of the Regulation 28 funds, and the life investment is performing at 11% because of the equity exposure that it's got, over time, that life investment will eventually catch up, overtake, and beat the retirement annuity. It's going to take long, but it will happen. This is a very general example I'm trying to give you on two fixed amounts. It works differently when it comes to monthly investments, because there's a thing they call Rand diversification or Rand equalization, whereby you don't buy the same amount of units on a monthly basis. So it's a whole different technical conversation. But all I'm trying to say is that if you had to go through this exercise and you had a investment with a higher equity component over a long period of time, the investment with the higher equity component would beat the investment with the lower equity component. Gee, that felt very, very technical, very intense. So, yeah. Oopsie, here we go. Yeah, gold is good. Oh, I'm glad if you've got tons, fantastic. My pensioen sal volgende jaar 5.5 miljoen wees. My huis klaar betaal, gaan op pensioen gaan. Fantasties, railroader. Do it, brother. As jy gaan oor die weg kom met die inkomste uit daai 5.5 miljoen, vat dit, gaan. Baie geluk. Jy's een van die min mense wat so goed af is, dink ek. François, can you take an annuity after 55 years while still working? Yes, François. As a matter of fact, I've got a number of clients that's done that, and they've done it specifically. Thank you, economist. And they've done it specifically because of the tax rebate, because in retirement they're still paying tax. So they took up this retirement annuity so that they can still deduct the premiums from tax. So absolutely you can do it. It is still a good investment and a good way to manage your tax. Economists. Thank you, Isidore. I battled to get that one out now. Can I have 3 TFS and put 36,000 each, one every year, or should the... Okay, so you can have as many tax-free savings accounts as you want. No limit. The only thing is you can only have 36,000 Rand invested in your tax-free plans annually. So you can take one tax-free plan every year and put 36,000 Rand in every year. One this year, 36,000. One next year, 36,000. One next year, 36,000 until you get to 500,000. 36,000 Rand max. Or you can open 3 tax-free savings accounts in 1 year, but then put 12,000, 12,000, 12,000, or 10,000, 10,000, and 60,000, as long as the yearly contribution is not more than 36,000 Rand. Doesn't matter how you do your tax-free plans. 1, 10, 15, 36,000 this year, 20,000 next year. Doesn't matter. You just cannot invest more than 36,000 Rand per year, okay? What do you define as a life investment? Please explain. Kunta? Okay, I'll explain to you quickly. So basically, Kunta, a life investment is what was called an endowment in the past. Still being seen as endowment, but these days they call it life investment because there's been a few small legislative changes, product changes, so now they call it a life investment. Okay. So what is a life investment? So a unit trust, quick explanation, unit trust is when you buy Anglo shares, Pick n Pay shares, Checkers shares, put it all in a basket, bunch of shares, that's a unit trust. The moment that you add onto those unit trusts some cash, some property, some government bonds, it becomes a portfolio. Okay. The moment you've done that, it's not a unit trust anymore, it's a portfolio. And then that is being used. That together with unit trust can be used in a life investment. So the difference is on the unit trust, once you withdraw the money from the unit trust, whatever the growth is that you get is your capital gain, and you get taxed, and you have to pay the tax to SARS because you've had a capital gain. So it's a capital gains tax that you pay. On the life investment, because it's structured a little bit differently, the portfolio manager pays the tax that happens in that fund. So all the capital gains that happens in the fund, the portfolio manager pays on your behalf. Over and done with, you don't have to worry about it. When you get the money, it's tax-free, so to speak, because the tax has been taken. It's actually after-tax money, but we call it tax-free. And that is a life investment, and the difference between a life investment and unit trust in very short form. Okay, let's see. Ladies and gents, I think I've got 1 minute left, so let me see quickly. Thanks for your info on growth. It's not an additional in my main pension fund. Great stuff. Dankie PJ. Lekker om julle te luister. Lekker om julle te antwoord. Thanks PJ, waardeer het. 49 and the GPF 22 years service. I have RA with more can I do to push my pension? So Isidore, if you are in pension in the GPF number 1 and you've got a retirement annuity, fantastic sir, congratulations. I think it depends on how big the percentage is that you're putting in your RA, so that you can either increase the RA to get the maximum rebates that we talked about, but it will most probably be to your benefit depending on your income to also be invested in life investment. Because I think your income is most probably already over that 31% tax bracket, and that is normally when it becomes better to be invested in that life investment. So that's most probably what you need to do, but a consultation will help you to get the right answer. Yes, I know you guys retire at 60. HB, don't give advice, brother. Kenta said. Okay, so ladies and gentlemen, thank you very much. I see that TikTok says my hour is over and done with. It's been fun as per usual. Have a wonderful evening, and I'll chat to you again next week, Tuesday. If you want to talk to me, contact me on the WhatsApp in my portfolio, and I will make sure to get back to you. All of the best. Have a wonderful week. I'll chat to you all next week.